rating, if you've got a speed rating, then of course the speed is increasing going up when the price is dropping, and the speed is increasing going up when the price is rising. So you miss out on the directionality of speed. With the volatility here, velocity, sorry, we can see that using velocity, we get the directionality of velocity as well. Anyway, we can see a couple of things using this idea, very simple. You can see that we get a lower low in terms of the velocity here. And the idea is that if we ever go to a measure against a divergence, against a peak velocity, that should be that area where we start to see the acceleration dropping off to zero, and the speed velocity dropping off to zero. So we can see that narrative happening there. There's the low price, there's the high price, and we're obviously now already starting to look for the possibility that we could see a possible bottom line trade in here. And there's a nice opportunity to do a bit of a buy trade, because you can see the velocity is now reducing. As we come off that price, we can see peak velocity again in here. And obviously we can start to use that peak velocity to try and figure out where the possible trade is. You might say, but this was peak velocity here. Yeah, but when it goes higher, the velocity increases. So it's only when we get to a measured move, we can do that study again. Coming into this area here, we can make some sort of reference again initially, and we can start looking at the possibility that there was going to be a sellable trade up here. Now, obviously that never happened. You can see that for yourself. It never got to that price, so there's no trade idea. Again, peak velocity into these areas. Here's another example just here. You can see there's peak velocity there. And again, you can simply then, as soon as you find where the peak velocity is, you put in your measured moves, you drag it across the screens, and you draw in a box. There's the box there, and that's where the sell might come in terms of that type of narrative. Does that make sense? So you can start to recognize these ideas, these simple ideas. If you've got peak velocity and it hasn't gone any higher, then of course, then you move. You can see, for example, we've got peak velocity here. It hasn't gone any higher. So you're already starting to think to yourself, well, that could be the mid price right there. As soon as you've got the mid price, you start doing some measures against it. There's obviously a couple of things we could measure there, and you start coming up with a price level. And obviously, as you come up with a price level, you just mark it on your screens. You think about the possibility that that might be where the end of trend might be located. And obviously, you start doing a little calculation against that, against value, for example, as well. So it's just another little way of looking at the price speed dynamic in terms of structure. And, you know, and when you look at it from that perspective, you can see some nice ideas forming. You know, for example, you can see on this sell off here, you can see that there was a peak drop there in terms of velocity, and it does end up getting back down into that area. But before that happened, you'd have already been thinking about this price. But because that's now down at the bottom edge there before the price is, you know it's probably following through. But you got the follow through that you were looking for, right? You got that exactly correct. And again, it's just about keeping yourself up to speed. You're not making a decision on these things until you reach the measure. So it's not like you're having to preempt these trade ideas. It's just about the fact that you're reacting to what you're seeing in terms of these peaks and troughs, in terms of the speed of the move coming into the charts here. You know, so that's what we're watching. That's the kind of basic idea of it. And, you know, based on that basic idea, you can see that we are definitely in a drop-off phase here, suggesting that the market is cycling into a sell opportunity, perhaps into the highs here at the moment on oil. We can watch for that perhaps as a trade idea, and we start tying that in with things like book. We try and tie that in with some value ideas, and we start looking for the possible explanation as to why that might be happening on the short sell side. Now, the interesting thing about this oil trade at the moment is that the buyers are certainly exposed at the top edge at 76.25, and it might provide us with a little opportunity to work a bit of short sale business. So, you know, we're not just deciding that because of this we're selling it. That's not going to ever be good enough. Otherwise, this is all we would teach. But obviously, as I said, it's just if you're trying to understand the concept of these types of probability cycles, then of course this is part and parcel of that type of a narrative going forward, isn't it? You know, you can start to see some of these little technical studies, these little mathematical studies, providing you with some of that information.